I'm like here. I'm eating, but I'm watching your screen. So
Okay, awesome.
yeah, cool.
All right, I'll share my screen now. Okay, let me know if you guys can see my screen.
Yep.
Awesome, awesome. Okay, so my number one position still right now, which I'm still in, is SQ. Let's take a look at SQ. I actually took this short on, let me see, where was it at? I'm gonna go to the 5 minutes since I was scalping this. So basically, where did I take the short at? Right up here. So I took the short right over here, right on that pop. It popped up, it created a hammer, and so it basically, um, I got a confirmation. I was waiting for this hammer to see if the next candle was gonna open above the SMA. And the moment it broke through, that's when I took a position because then I had a definitive line to stop out of if it did reverse. Typically, you want to wait for the candle to close, but since I was watching it from the 5 minute, this was a quick candle, and so the moment it closed, I took that position, right? I took that position actually right when it broke the 20 SMA on the downside. And again, if you can remember, like the cloud is above us, and then the price candle is below the SMA and below the VWAP. So that gave me a confirmation. And then you have the evening star as well right there, kind of pattern. Um, so I took that trade, and of course, immediately went on the downside. And as you can see, it kind of lingered around. So right now I'm still up actually like 7% on this option trade. And this is also a good example why proper entry is going to give you a more relaxed trade rather than having to chase. And so I waited for this setup. I didn't get in like, down here or anything like that. Like I timed this pretty good, so it worked out pretty well. Um, Now that it's made a few times that it came up here, my stop was 60, 62 mentally as far as like percentage wise. But this was my initial entry stop as a test. Once it started going my way, I was gonna let it go against me a little bit because overall the on the scalp side, short term wise, we have a pretty good downside trend already, and we have all the clouds on the upside. Again, this is on the 5 minute. It's a different story on like the daily. As you can see, the daily, it actually broke through, but when I took that trade, it was somewhere around here. It could have bounced up, and I could have been stopped out. But now since on the daily, it broke below the 20 SMA, this has a potential to go to the cloud, right? This has the potential to go to the cloud before it reverses up. So that's my little take on it. And again, I'm not holding 30 days or anything like that. So just short term. Let's see. All right, so the next one was eBay. Let's see what eBay did today. I think everything was like flushing out. Oh, look at that. eBay pretty much recovered on the daily, or actually, no, it's on the downside. Let's look at the 1 hour. Okay, so right here on the 1 hour, it gave you a clear breakout or breakdown, right? So you could have taken that right when it broke down, and then at the open, retesting the SMA. And again, this is on the scalp mode. This is not a long term. So if you're like me, I like to scalp. That's just I know I'm good at that. Even in the stock. So I'm applying the same strategy with the option, but now we have a much more clear indication with the SMA and the cloud to give us a better read. So I guess we could have taken that trade on the downside, but on eBay, overall we were bullish on this. So if you look at the daily again, yeah, so we're still above the cloud, above the 20 SMA, and again, it's got room to meet up with the SMA to do something like this. Okay, before it scrolls up or something, something like that. Okay. Again, we still factor in all our support and resistance. So if you go back to basic, you got your support here, support here, support there. All right. So you still want to pay attention to that. But overall, um, eBay looks like it's got room to the downside. But the moment if this support area right here reclaims or holds up, then you have to respect your stops, right? Because this could reverse on the upside. This could do this tomorrow, and then potentially break above it, retest this support, and then come back up. You can also do your fibs on the upside, and then there you go. Look at that. It matches. It matches with our support and resistance. And it's also important too, guys, to double layer um, your fibs with your support and resistance read, because look at this. Like this support almost exactly matches, right? Support resistance. So never discount your support resistance lines and strictly going with one signals. You always want to stack them. The more they align, the better. Okay. eBay. What was the other? What were you guys playing today?
We're not discussing mine this
I
second.
was uh I was long on Apple.
I have Apple and Starbucks.
Okay. Apple.
Yeah, I had Starbucks for like the yeah, Starbucks as well from the
Oh yeah,
yesterday.
this was beautiful on the morning.
The morning entry was perfect.
Yeah, the morning we got in. I waited for that dip. So let's go on the daily or in the 5 minute actually, since this is what I played. Oh yeah, this was perfect. So where was it? On this morning flush right here, I pretty much was it? I think it was this one. It was this dip. Like I literally took that dip because if you go in the hourly, look, what was it? Yeah, too far away. There we go. Because look at this. I just knew this was gonna reclaim because the 100 line is right here. So it basically presented our pattern, right? On the upside, pull back, and then bounce up. And then if you do the fib, that's actually the first line. So we'll probably do right here. Look at that. Right on point. So if this is the line that I wanted to take, oh right here, the yellow line was 61.8. That's like Brian's favorite fib line right there. Right, Brian?
Yep, 61 to 8. Super strong.
61.8. So I took that trade, and here's where I screw up. I didn't pay attention, so let's remove this. I didn't pay attention to my levels, so you have first level and go the arrow. So if I took the 61.8 entry, 50% should have been removed right here, and then second target, second fib I should have been like 3/4 out already. And I got too excited. I was like, oh, it's gonna run, and then it got slammed, and then I didn't get filled. Like I actually put the order the moment I saw it started turning, and I didn't get filled, and then I was being stubborn of chasing it. I was like, oh, I'll just wait for the next bounce, and it didn't bounce. And so I think I ended up taking profit like somewhere around here. It was like 30% instead of like 80%. Because this was like what Brian says, sell into the strength because your implied volatility is so hyped up that your price gets inflated. And so you could have taken advantage of that. Anyway, I didn't, so I ended up settling for less. I was still like it was like a 33% or something like that. So it was still good. And as you can see, it turned. I was already out of this, and I think Chair, you wanted to re-enter Apple on this one. Is that right?
Yeah, I re-entered. I only took my contract for the first time, so I re-entered again when it got back down to the 150 level, and then popped back up to 205, and I took out all my profits there.
Mm-hmm.
and then at the end of the day, it got back down to 140, and I'm like, I looked at it and I figured it's probably going to be strong at least. I'll hold it if I need to. I'll hold it till this Friday. So I got back in at like 140
Hmm.
before the at the end of the day. So
Nice.
and it popped back up a little bit before it closed too. So we'll see what it does tomorrow. But
Yeah. So my take on this is right now in a 1 hour on the daily we're still pretty good, right? But again, you're so
yeah,
far away, like what I was mentioning on a comment earlier, that the SMA and the price candle tends to pull
hmm
each other or push each other away. So right now it's far away, right? And the cloud is like so far away as well. So it's gonna have a
yeah,
tendency to probably pull each other back down somewhere in this level
mm,
before it starts to continue up. So you might see something
okay,
like
yeah,
that.
yeah, yeah, yeah,
Of course, that's no guarantee that, but if you look at the behavior, look how far they got, and then it pulled it back
yeah.
down,
I
and it
start
pushed it back
pulling.
up,
Yeah,
and it pulled it again. I mean, you can see right here, after
yeah,
this big flush, it pushed it back up, was out 5 days, and then in 2 days, it slammed it back down. So
yeah,
you got 4 days, and now it's starting to turn. So you never
yeah,
know. This might repeat itself again.
Yeah. But if you're trading on the daily, you have to be long. If
Correct.
you're trading the hourly, you're short.
Correct. So if you're
yeah,
trading a long timeline like what Brian does in like 30 days or more, this is definitely bullish. As this is a clear indication it's bullish. But of course, if you're if you're trading a longer timeline, you can't be looking
yeah,
at this on a daily or on the 1 hour or the 5 minute, because that's gonna scare you
yeah,
off, like what Brian was saying,
yeah.
right?
Yeah, like
So a question on that is, so on my Starbucks, I'm in that same boat. I have that. I charted on the daily because I was going 20 or 24 days out. So
Hmm.
I'm not like nervous at all. But for the Apple one, I also charted on the daily, but I went with the 10-day contract. Is that too close of a contract when I'm basing my my analysis on the daily chart, or is that still okay with the 10-day option?
I mean, it's fine. You just have to get out the next day every time. Because I do
Yeah,
that too.
okay.
So if I
Yeah.
buy the daily level, I always get out the next day,
Mhm.
especially if it runs 40%, 50% the first day. Because what usually
Sure.
happens is if it runs 40%, you get a gap up in the morning, you'll be up
Yeah.
like 80%. That's why you just start taking profit.
Yeah.
But honestly, if you were holding Apple like 24, 30 day today, right? It didn't matter, like, no matter how much chop we had today because of Powell talking, you're really
Right.
still only down. Like, I'm only down 3% now, even though it looked like it was like such a bad day. But
Yeah. Yeah.
I truly think Apple's gonna rip to 154 tomorrow, and so is Google and all those stocks, Microsoft.
Hmm.
Because after a down day today, chances are these guys are gonna break all time highs tomorrow.
Right. So yeah, so like what Brian's saying, as you can see already, like you have my the 49 for pretty much 150, the 150 area
Yeah.
is a support line that I drew out, right? And
Yeah.
look at where it's matching. It's matching pretty close to 61.8, and this is like Brian's prime line. And if you look at the trend as well, the pattern is there on the long side. You got the dip, it held. You got the bounce, okay. You got the pullback, and then now you got the
Yeah.
double support line, and you have a lot
Yeah.
of room to the upside. That's exactly our pattern, what we're looking for, and it's already presented right there. So tomorrow's market open, as long as this candle stays above the 61.8, like I would take that trade on the long side,
Yeah. You
right?
Well,
if you really wanted to hold it too, because I really think the market's about to turn bull again, just buy the 2 week out and hold it till Friday.
There you go.
You will get like 100% return, guaranteed.
So right now, I'd make a list as Microsoft would be my number one play because that's already right there, right? And as
Yeah.
you can
Can you
see,
pull
it's bullish.
Microsoft so we can see it?
What's that?
Can
For
you pull up the
oh,
Microsoft
Apple.
chart?
I meant
Oh, Apple. Okay, yeah,
Yeah,
yeah.
Apple is
Apple
here.
is right there.
Yeah. So Apple.
Yeah, and so is Microsoft actually. Now that you mentioned it,
Okay, let's pull up Microsoft. So take note, Apple's gonna be on one of my top lists. Microsoft.
same thing.
Okay,
Check this guy out.
let's go
This
over
guy's
here.
literally,
Oh yeah, this is crazy. So if we just
yeah.
get rid of everything for now.
So chart it. Do the fib on the left side.
No.
On the left. On the left.
This one?
Getting better?
Yeah.
Yeah. Yeah.
There you go. Check
Okay.
this guy out.
Yeah, so this is exactly our pattern, right? Breakout and then a
The back test.
pull
Yeah.
back, and then you already got a hammer.
Hmm.
You already got a hammer right here. You got double hammer, double whammy.
Yep.
So your price target. So if you even if you enter here now, this is your stop, right? You
Yep.
can enter anywhere in between here because this is already a clear signal of bullish. Like look at those wicks at the bottom. That's a lot of buyer
Yeah.
demand. Buyers are coming in,
Yeah.
right? So you can take you can probably if you enter anywhere here, you can probably add at the 294, take your 50% profit there, and then you probably I don't know, it's a pretty far move here.
I mean,
360.
that's a thing. It's a huge bull flag, so it consolidated for like 10 days.
Yeah.
So this is just the beginning. So
Yeah,
yeah,
this could
this
this
one's
could
gonna,
pop pretty fast.
yeah, this will go pretty fast.
So Microsoft, even anywhere in between here, like what would you say,
Hmm.
Brian? Like, because that's a far gap. So if you're conservative, I'd probably take 50% and 3/4 off here right here, and then let the
Yeah.
quarter run,
Right.
right? And then of course, like what we talked about in the comment, is pay attention to your. You still have to pay attention to your price action and the behavior of the candle, and then also your level two. Level two will tell you what's happening in this area, right? The behavior of it is very, very important. Of course, you have all our indicators down here, right? This guy, whatever that says, on once we get there, this will tell you the story as well. Okay. Oh, Brian, I added this Chaikin money flow. I got that from Vince.
Yeah, that was good.
Yeah, so like when he explained the Chaikin money flow, I was like, oh my God, that's so like that's another clear signals for us to confirm because what he was
Yes.
saying is like let's say you wanted to enter like right in this area right here, right?
Yes.
And then the Chaikin money flow was like below zero. He's saying don't take it
Mm-hmm. Because there's
because
no money.
there's no money. There's no money coming in. Like although the signal is there, there's no money coming in. So I was like, oh wow, that's crazy. So
There's another one from him. It's like the volume thingy. I just don't remember what it is.
yeah,
Let
I
me
think
look
he
it up.
mentioned it in a video.
Hold on. Let me find it for you. Because that one's
DJ, when you guys are drawing on the daily chart, what why do you pick where you drew the fib versus the newest run up where it hit the 294 high? Like why draw the fib over there instead of the most recent run up?
One of the reason is this was the breakout level, right? So
Okay.
it tested right here. I mean, you
Yeah.
could you could draw it here technically. You could draw this one, right? Maybe that's what you're asking.
Yeah.
Why not there?
Yeah, that or like when it hit like the 294 high, that's the most recent one. So
And
like
maybe this guy, right?
yeah.
Yeah, there's nothing wrong with that. You could chart any of this. Uh, what you wanna, what the what the difference is, you have a smaller target when you do
Right.
the shorter pull, right?
Yeah.
There's nothing wrong
Yeah.
with pulling from there or pulling from here. It's just you have to consider all these levels. And then what makes it even more convincing is when these lines line up, right?
Okay.
So look at this example right here. These lines line up, right? These lines
Yeah.
line up, okay? And let's see. These lines right here line up, okay? So
Yeah.
the more they're more aligned together based on target, like the more convincing they are.
Can you sorry. Can you turn on volume profile really fast under studies. I just want to see if that's the one.
I think that's the one. Sounds familiar.
It's called volume profile, and it's on default.
Let's see. Oh, under default.
Ah, no, no, it's under studies, and then
Oh, there we go.
volume profile. Yeah, see if it shows up.
Yeah. What happened?
Why is it so skinny? That's weird.
Let me get rid of everything real quick. Is it this one right here?
Yeah, it's supposed to be that one, but it's so skinny. I don't know why.
I
It's
think
like
that's
glitch or something.
yeah. I think that's supposed to be on the left, right?
It's supposed to be like a really fat like line.
Yeah, it's supposed to be like it's kind of like the volume price right here, but it's the volume what is it called?
Hold on, I'll figure it out. It's okay.
It
You
was
can
called
just
something.
remove it for
It
now.
was called
Yeah.
something. Yeah, I remember what we're talking about now. Why didn't I do it? Okay. Okay. All right. So Microsoft. Let me put the feedback on there again, so you can do this. And again, like Chair, just to clarify the pool, as far as pulling a shorter timeline like this, as you can see,
Yeah.
your fib line is your gaps are much shorter, right?
Tighter. Yeah.
So your price target from like 294, 295, like look at that, that's first fib. But if you were to go on the daily and you're pulling like the bigger timeline, like this right here, that was the breakout. You can see the gap, right? It's much bigger.
Yeah.
So your price target is bigger, and so therefore you have to give it more time. And another way to really calculate is you count these candles and what was the range to move however many fibs. So let's say if you enter right here, right, and you're going 2 fibs up, what is that? 294 to 315. That's a long ways. So let's just say
Yeah.
you go halfway, like 308 or something. So
Hmm.
what is that? 8. So $12. So you have to kind of look at it here and then the behavior. How many days did it took to move $12, right? So if it
Yeah.
takes a
Okay.
if it takes a week to move $12 and you take a weekly, you're gonna get crushed. You're gonna lose all your money. So you got to give it more time.
Yeah. That makes sense. Okay. Yeah, I was struggling with that because like I was bouncing between doing it on the daily for the option, and then when I'm scalping, I'm typically charting it on the 15-minute chart and then trade on the 5-minute chart. But when I go to those minute charts, like I find myself drawing with the most recent time, the most recent uptrend. But when I look at that, sometimes it's like it's so close to it that when you draw it, like you said, the gaps in between are so narrow that it's like it's not even really worth it to risk. Like even when you go 2 fibs up, it's only like a 20-cent increase in some cases, right? It's not even um like the return doesn't make sense if I look at it that way. So
Yeah. So that's why it's good to pay attention what the range. Like look at the 1 day range on this guy, right? You have a 294 area, and then the lows of what was that? 290. So you have a $5, almost a $5 range here, right? 294.82 and 290. You have a $5 range. So whatever the delta is, let's say it's a 30 delta, it moves 30 cents. Every dollar it moves, you get added 30 cents into your contract. So if is that worth it, then yes, then you give it, like if that's the move in a day, you can take a weekly, but you gotta make sure these moves happen. If it
Right, right.
starts going sideways like this, just grinding, these kind of
Yeah,
moves will kill your contract. Like
right,
the
right,
theta, like every time it moves up and down, it's like it's taking a bite at your money.
right.
That's the best way I could explain it. Um, let's see. All right, what's the other one? Oh, Google. Oh, you know what? Spy. We missed Spy move today. Look at this move on the Spy. So if you look at the Spy, this is crazy. So if you were like a risky guy like me, I'll take a 1 day contract. Let's look at the contract today. So let's say we saw it yesterday, right? And then our signal would have been like the moment it crosses this 20 SMA. This is scalp, so we scalp at the 15-minute charts. So my entry would be somewhere right here, pretty much at the open, right? Because it's below the cloud, it's below the SMA. So in the contract price target, I probably would have targeted right about here. So let's do the fib as well. So right at the open, I probably, yeah, this would have been right here. So yeah, right at the break of the 100, I would have taken that. You go one, two fibs down, and price target is, let's just call it 443, right? 443. You go here, 443 today. Let's send that over to quick chart. Let's take a look at this. Oh, what is it showing? What the heck? What did I do? Oh, okay. Wait, is that right? Hang on here. Oh, the puts. I clicked on freaking clicked on the call. That's what happened. 43. Quick charts. So if you can see that on my left hand side, right? So these contracts right at the open was like 74 cents, and it went all the way up to $3.09. Yep. So that would have been, let's see here. Let's just call it 310 minus 74 divided by 74. So 319%. So that's crazy. So this move right here would have given you a 319% on your money. Of course, you would have probably taken profits like right here, and then this would have probably stopped you out. But overall, the whole moves was a 319%. That's on the like Wednesday expiration. So that's like almost playing a Lotto Friday. And that's why a lot of people play the SPY, because you have what is it? Monday, Wednesday, and Friday contract expirations. Okay, let's see, what was the other trade? What else did you trade today, Chair?
I just had Starbucks, but I had that from yesterday. That was my 25-day contract. So
Okay, so Starbucks, let's
it
go.
was down, but it came back up at the end and then gave a little bit back.
Yeah.
So let me ask you this: how far contracts did you buy?
I bought the one out to September 10th, I believe.
Okay, so when you went down, it only went down like 20%, 25%, right?
Yeah, exactly. But it came back up to like you said, it came at the end. It came back up to like 5 6%.
Yeah.
under.
See,
So
right, and so that's why when you look at the daily, you get time or those moves like today is gonna shake you out if you're in the 2 week outer.
Yeah.
Like you're gonna be like, damn,
What was the
I'm
price
down so
target
yeah,
much.
on this?
Starbucks,
Yeah,
Starbucks
it
is
was
one
120,
nine
I think. For
119.50 and then 123.
123. Was it Tuesday?
Oh, and by the way, if you're buy when I say September or October contracts, I'm playing the ones that doesn't say weeklies.
Oh,
Just a heads up.
oh,
so what's the
okay.
difference on
What's the
these?
difference?
So it just depends on the stock. So weeklies basically has no volume unless it's the same week. So they're not that liquid unless like you're playing a super cap like a Starbucks Apple, right? Look at the spreads on the 24th. Yeah, look, like this one has like a $10 spread, right? 195 and 210. So they're not really that tight, right? Compared to the 31 days out. $4, $2.
Hmm.
Because there's always naturally more volume on those.
That's good to know.
Oh, that's good to know. I didn't know.
Yeah, I did
I
not know
I
that.
see that.
I see
I
there's a
did
lot
not
of
know that,
volume
but
in
yeah.
Yeah, so
compared to the
like
other
pull up
ones.
like Tesla. You'll see what I'm talking about. Yeah, pull up the Tesla chain. So yeah, so look at this one, right? 3685 and 3620, pretty tight, right?
Hmm.
But if you do like the 21 September, or yeah, that one, it's I mean Tesla's still pretty good, but I
That's still a
mean,
pretty big spread.
hmm,
That's still
yeah,
way too
like
much spread.
they are huge. Like
That's
cuz I mean Tesla's still kind of liquid, but go to the one past September. You'll see how it really drops off. 38, that one. It's like, this one's not
Oh,
bad. Do like CMG. I'm sorry.
well,
Try that one.
that's $70 spread.
Yeah. Do CMG instead. You'll see what I'm talking about. Here you go.
Chipotle.
See, look at these, right? Those
Oh
are like
Jesus.
those are pretty bad, right? You agree?
yeah.
Yeah,
Yeah.
but look at the one that doesn't say a weekly.
That's a $700 spread.
30,
Uh,
the one above. Yeah, that
Yeah.
September 17th.
Yep. See, way better, right? It's like $200.
yeah, that's a big
Mm,
spread.
yes.
Good to
So
know.
that's why when what and that's when you'll see when people say like October contracts, September contracts, December contracts, they what they really mean is the one that doesn't say weeklies on there.
Oh, and no weeklies. Okay.
Yeah.
Yeah.
So more
Good
more
to know.
spread. Yeah, more spread on the weeklies.
Yes. And more liquidity too
Okay.
on the monthlies. They call it monthlies. So
The monthlies. Okay.
yeah.
Right on.
Oh, yeah, always get monthlies. If someone says like I'm buying September's, they mean September monthlies, not the weeklies.
So Starbucks, you had 25 days weeklies. So you're getting killed on the spread already.
Yeah.
Let's look at the chart again. So again, guys, if you guys are trading a longer timeline like this, you're just gonna have to sit tight on this. Like on these pullbacks, like what Brian says, if you have a 30-day contract, like you should just set it and forget it, right? Because if you're watching it every day, this will like builds up your anxiety. Like the only time,
That's what I want to remove.
yeah.
I can
So
I can get the anxiety from my stock scalping.
right, and so like what Brian was saying, he's allowing these stocks to have like a what 20 to 30% go against you, and then before you do your stop loss, rather than charts.
Yes.
So instead of basing it off of charts and candle patterns, uh, on a longer timeline, you got to base off of percentage. Like how much are you willing to risk to have the trade go your way before you stop out. So Brian
So
is doing 20%, right?
No, okay, so it depends. So if I'm doing the 60-day out, it's usually candle stops.
Mm,
And if that happens, majority of the time it's 30%,
okay,
right? But it's actually way less if you do candle stops, like 10 to 12.
gotcha.
Like when I got stopped out on Square the other day, remember I said I'm stopped out on Square?
Hmm.
It was like a 14% loss just because I had 60 days out. However, um,
Yeah, because the pattern is
the
broken regardless.
yes, so I wouldn't even wait for like a negative 30%, just get out.
Yeah.
Because you know if you re-enter and the pattern's correct, you're gonna gain like 60, 70, 80% anyways. So
Hmm.
don't even risk it. So use your candle patterns or candle stops. And it's usually the low of the previous day,
Yeah.
if that even makes sense.
So Brian, in that case, in this scenario right here, if I draw this line out, we're on the daily and it broke the SMA line here. Like, would you like take a stop here since it broke the line? It did close 2 days in a row, below the SMA. Would you just wait for the re-entry?
I mean, you wouldn't have taken the trade here anyways because there was no trigger, right?
No, if
So
you're
it
already if
only
you're already in, if you're already in,
oh,
you
it's already
yeah,
in.
you're trying to minimize since the pattern broke right here.
You actually would have taken the stop like maybe 4 days ago before that
Oh, right around here.
on the huge gap down.
Oh, this gap down.
Yeah, you would have just taken it already because it the previous day, the low of the previous day, right?
Oh,
Remember that?
right. Because you got in like right here, right? Right at the candle here.
Me? Me?
Yeah. Where did you get in at?
No, I got in 2 days ago.
Oh, so right here, right about
No,
here.
yesterday actually.
Yesterday. So you're right down here.
Yeah,
Or
look.
no, wait, where
Oh
candles
yeah,
over here.
yeah, right there you go. Yesterday.
Okay. Oh,
Yeah,
you still got. Yeah.
yeah, exactly.
That's why we're
And
on the
my stop,
daily. It's like we're so far out.
yeah, then my stop loss is below the green candle on the left, so it
Gotcha.
never really got there. Yeah,
Yeah. So your stop is right down here.
yep. And like the lowest it went today was I think 22%, right? So if we got stopped at 26%,
Hmm.
but your profit target's like 100 plus, so
Right.
it's not a big deal.
So there you go. So for those of you guys that are wondering, like when do you take your stop? Brian always like pay attention to the wicks of the candles. So if you
Because
respect that,
usually it won't, yeah, it won't usually trigger. Like people are watching those too, like the big funds,
hmm
and they won't let it go below. They might let it go below for like 1 second, but they usually buy it up.
yeah, and that's why you wait for the candles to close, right?
Yeah,
Okay. So that's Starbucks. You guys still got a long ways up. You guys
yeah,
got a lot of time.
yeah. This will be another MCD. The only thing that looks crappy about it is it's under the 20 on the daily, but
So what's your
fine.
what's your take on MCD?
That one's still going up.
Yeah. So you're actually today was a prime entry because look at this. Oh my God, we missed that one. Like it literally did pull up, push back down, and then now it pops back up. Now if you
It's
do,
ready to go to the next level.
yeah, so if we fib this, boom.
Yep, exact 61.8.
Yep, exactly 61.8. Remember that again, guys, 61.8 is like the prime entry once your pattern is presented.
Mm-hmm.
Okay. So you could have entered at what 70 78 6 if you were impatient.
Yeah,
And then
but
you would have been stopped out right here.
mhm. And that's why when I'm buying the dip, usually you want to set parameters right away, right? If it retraces at 61.8, your buy zone's 78.6,
Yeah.
and then 61.8 is your stop loss. Because with knowing that, you
Yes.
already established how much you're gonna lose,
Right.
so it's not scary. Better than like, oh, I bought the dip, but I don't really know where it's dipping to.
Yeah. And so another thing that I see here, guys, to give you like confidence in your trade or your sizing, on this particular trade, look at how much support you've got here. Look at all these support.
Yeah,
Like that's strong, strong conviction that It's already pushed. The buyer's already pushed it up, and now he gave you a pullback. Like this pullback is like a gift,
Hmm.
right? Because it's at the key level of support, and you have everything going for in your position. You get the SMA, you get the VWAP there, you got above the cloud, clear for takeoff. So if you got in right here, or if you're gonna get in at the breakout, right? You have all these target for going for you. Yeah, and I would definitely take profits of the 61618
Hmm.
because you have resistance here. You have resistance in this level right here.
Yeah, this is where those 2 weeks out contracts would have been paid massively. Like if you bought it at the reversal and you bought 2 weeks out, you would have been,
God, yeah. This all this move right here.
yeah,
Yeah,
that
that's
would
it.
have been like 300% and going.
Yep.
So that's how you want to make your money.
We'll catch one of those one of these days, the 500 to 1,000 percenters.
What's your biggest catch so far, Brian, on these options?
700% on Amazon.
Oh, we're hunting for those.
We'll get those.
You'll get it. Like no, if you're buying 2 weeks out and you decide to just hold it, you'll get it.
That's
Easy.
crazy.
I
Pick a
mean,
dollar amount and just YOLO it on your once the pattern present itself.
yeah. Once like look at Tesla today, right? Check Tesla. We already knew that we talked about this yesterday, how Tesla was gonna dip today, right?
Hmm.
See, we talked about it exactly how we played it. Like TJ even has it charted right now.
Yeah, it's already charted.
Yeah, we talked about this the other day, and we said if Tesla dipped at the 50 line, or like you would just buy it, right?
Hmm.
Somewhere, somewhere in there, the long term trade, the long term pattern.
Right.
Yeah, so it would have paid a lot.
Yeah, that's crazy.
Not even that one. The chart the other way.
Oh, the short side.
No. On the left side, fib the left side. Yeah, the breakout. Yeah, there you go. Perfect. If you were paying attention, you knew the cloud bottom was right there, and it hit 127, and we were gonna retrace down below. So now it's ready for 762. So if you're risky, you just get 3 weeks out, and you're holding this to 762. If that happens, you're gonna hit like 500, 600%er. No lie.
Yeah, that's a long ways.
But I mean, that's actually really short for Tesla because Tesla moves like $50 a day.
Oh, I know, it's crazy. Let me see
Hmm.
what the contract looks like. So you do 30 days out in this guy.
Yep. Just do 760.
Yep. 760. How much is 760? 760 is right here.
So 785, right?
785. Oh man, yeah, that's low delta.
Mm-hmm.
So you
Like
do
the 20.
30 days out.
Yep. At price target.
Yeah.
Because if it happens, right?
Hmm.
Because if it hits, just look at what at the money is right now.
Oh my God, big payday.
There you go. Like $4 or 36.
So 36 bucks from 785 to 36 dollars. That's
Yep.
insane.
That's how those big traders do it. They do really low deltas and they swing them.
Hmm.
I mean, we've seen it. We've seen Sam.
Oh yeah,
They're
Sam.
like,
Sam.
yeah,
Spartan
they're
Flags.
buying, yeah, they're buying contracts that are worth like $7 and dumping it 40, and you're like, wow,
Yeah, and that's
how
the
would they
thing
do
too,
that?
guys. When you guys like when you guys become like the bigger players, you have to play the bigger price stocks
Hmm.
because your dollar amount has to be able to absorb the price because you can't play $100,000 on a like you know um was that AMC or MCD
Hmm.
on a low price because you're gonna be the only volume.
Yeah.
and you don't want that.
Yeah, like do your AMDs and stuff. Your AMDs, your Nvidias.
AMD is like
These guys. Look at those open interests, right?
yeah, yeah.
Yeah,
That's
people
not
like
that much dollar
hmm?
wise.
It's not that much, but I mean, these guys are about. I mean, because look at October's too and November's. Yep. So this is
A lot of traders there.
yep.
A lot of contracts.
Yeah. So AMD is one of those super runners because once it breaks out, it breaks out. So
It just goes.
so AMD is one of those things where if you hit support, you buy the 20 delta 60 days out, and you're gonna quadruple your money if you just hold.
Hmm. So right now,
Because I mean,
AMD is priming, guys. AMD is priming.
yes,
So it's
it's
actually
close. Because like look on the left, right? From what we fibbed,
right here.
like from right here,
Hmm.
exactly. So if you bought at 85 and you
That's
got the
insane.
20 delta, you would have got paid so much money.
Like the breakout is right here, and look at this. You could have entered right here and cashed out way up here.
Yeah. But your entry was actually all the way at 85.
Right down here, right?
To your left.
One
Yeah,
moment.
right there. The
Oh yeah, the
red
crossover.
line.
Yeah.
Yeah, the red line.
Yep.
There you go. And if you were just holding this at 61.8 with 60 days out, you would have hit like a 500 percenter.
That's crazy.
So,
Yeah. So if you didn't get in right there, you would have gotten right above the SMA, right here.
mhm.
If you didn't get in there, you could have gotten right here. You had a lot of opportunities to make money on this guy. And
Yeah.
right now
And I
it's
mean, it's doing it again.
yep, it's
So,
presenting itself again right here.
yep. And just remember, AMD is a super runner because everyone loves AMD for some reason.
Yeah, so if we were to get
Like,
rid of this guy, we'll rechart it on the fib again. So let's see what it looks like here. Boom.
there you go.
Same exact same spot.
Exactly.
And then
Like, this is one of it.
this is a
Like,
good trade.
look no further. Yeah.
This is a freaking prime trade. So do
And
30
and
days
look
out,
at
right?
the I would do 60 if you're gonna hold the whole thing, but 30 days if you're high risk.
Yeah. So I do that. And if
So
you're
when you're holding that far out, like, is it better to based on a setup like AMD here, is it better to trade further out of the money and not worry about the delta as much, or is it still prefer to be as close to the 30 cent delta as possible if you're gonna be like 60 days out?
Honestly, if you're gonna trade this long,
Yeah.
um, if you have 60 days, it's better if you get like the 30 delta. But if you're gonna do the 31 days out, you want to be as close as possible to the money, right? That's kind of
Okay.
important. Just because you don't want to get hit by time decay. Once you're in the
Yeah.
money already, the time decay hits less and less, right?
Sure.
So,
Yeah. Yeah. Okay. Yeah. That's a good point on the time decay.
mhm.
so let's say for example, I guess this is another way you could look at it is again going back to the range dollar wise. So you have what 89 to what is that? 122. What is that? 30 $33.
Mhm.
So a $33 move. So you go here. $33 move. If you're expecting it to move another what? What do you think moving on this?
33 bucks.
33 bucks.
Yeah.
So, okay.
Yeah, exactly.
So
That's what I
$33.
mean. Yeah.
And let's say you have
Yep.
$33 and it took 1, 2, 3, 4, 5, 6, 7 a week to get there. So if you're a risky kind of person, you go $30 out. So you got 110 right here, and you go
Yeah.
$30 out, right? What would that be?
The 120s, the
140.
125s, yeah.
So let's just say 150. Look at your delta.
Yeah, you
You'd make so much freaking money. So you got 4 cents on the delta, right? But look how much it adds as it gets closer to the money. right? Like the closer you get to the money, that like that your delta gets higher and higher. And so you go from
Yeah.
4 cents to like 45 cents. So imagine adding 45, anywhere from like 30 cents to 45 cents on your purchase price. That's insane.
Hmm.
Like every dollar it moves up from there, it's like 100%.
Yeah, it would be like, yeah.
Jeez.
Yeah, like where would it be? Where would it be becomes 100%? So let's say you got it at 25 cents. So 25 cents, the more
It
you
only
move,
has to move $4,
it only has
really.
to move $4. That's crazy.
So if it's that cheap, what's stopping like people from like just going with that? It's like literally like 25 cents
Time decay,
there.
because it's so far, right? Any drop off will get killed.
How so if you were looking at that, like how do you calculate the time decay into eating your money? Like
It actually tells you. Can you click on it and try to buy it?
Hmm. Let's see, 150, right?
Yeah,
yeah.
just do buy single, and then hit confirm and send. It won't even fill anyways. So, oh, we don't see the pop up in the box. It will actually tell you.
Oh, okay.
Yeah, it says theta.
Oh, gotcha. Is there a way
Okay.
we can have that show up
What do you mean
like
on here?
on here? Yeah, like you know how you have your delta and your bid and ask, and you have that in
Oh yeah,
one
you
column.
just change the delta to theta instead.
Oh, okay, okay, gotcha.
Oh, change your open interest to theta or volume. Change your volume to theta instead.
Okay, what I want them involved. Oh, I guess you want the custom quotes.
Do
Where's
the
my
options Greeks at the bottom.
options Greeks?
Yeah, theta.
Percent theta.
PO price. Oh, there you go.
There you go. So as you can see, how much it takes off. Was that a
Mm-hmm.
day, right? Per day.
A day. Yeah, throughout the day.
So it's almost like a race,
Yeah.
right? Like if you're every day you're losing this much, right? And it gets as your days go on, it gets higher and higher. So if the price
Mm.
the price is not going closer to your way to add your delta, you're
Mm-hmm.
not you're losing
You're
more.
adding more to that actually increases too, right? So
Yeah. So imagine you like
yeah.
the following day you lost $3, but you added five. Yeah, you see what I'm saying? You added
Yeah.
four, yeah, but you lost four, but you added six. You lost
Yeah.
four,
So
but
it's
you added nine.
it's barely
Yeah,
going
yeah.
up, right?
You see what I'm saying? So that's
Yep,
how it
yep.
correlates with the theta and the delta.
Hmm. And that's why a lot of people buy at the money because the hit is not as severe.
Yeah,
Yeah, because look at all
that
the
makes
ones that
sense.
deep in the money, like the theta is very low, but look at the delta.
Yeah.
Yeah.
It barely makes a dent on it.
Hmm.
Yeah, yeah.
So
So that's why my happy medium is the 30 delta.
yeah, get your
That's
30
if I'm
delta.
like risky. Yeah, that's if I'm risky. There you go. That's exactly it.
Yep.
Yeah.
Because my goal for all these options is to go deep in the money, not just to hit it. I want it to go deep in the money because that's when you really start getting paid.
Yep.
Yeah. So it's really like a few ways, right? Like if you go further away from the money because you think it's just gonna hit, you're willing to sacrifice the time decay because you feel like you believe that it's gonna make up in the profit if it reaches your target there. The other way to do it is you get closer to the money, the time decay is not is less, and if you get into the money, then it's even more beneficial. So
Exactly.
there's a few ways to look at it, but either way, there's the risk factor there that you have to consider for yourself. Like, what are you willing to gamble on? Is it like being closer to the money and eventually increase your delta as you get deeper into the money, or kind of working your way into the money where it's cheaper up front, but if it doesn't go your way, you're still gonna get killed on the time decay.
Correct.
Yeah.
So the only way to kind of combat that is you get the 60 to 90 days out. If you're gonna do like some really like out of the money deltas, because that's how you get paid. So do the the Novembers, right? 90 days out. Do the 20 delta. 22, right? There
Yeah.
you go.
Four
There you go.
cents.
See, that's not that bad.
Yeah. So you're basically risking $4 to make $22.
Yes.
That's a
Yeah.
pretty good
Yeah.
ratio there.
hmm And that though, since you have 90 days out, these are the ones that you hold until price target because you already see it, right?
Yeah.
Can you? So that's the 135, right?
Yeah, 135. So if you look at
Look at your price target on the chart. 142.
Yep.
So just think about current price right now plus $5 in the money. Can you check it?
Mm-hmm.
So on the option table.
Price, where are we at? 3 or 107?
So 107. So check the 102s
102.
or the 100s, I guess.
So yeah, it would be 100.
So
14.
it would be like 13, right?
Yep, 13.
If it hits. But you're only gonna pay how much for it? $3.
$3. So from
Mm-hmm.
$3 to $13.
Yeah, 4 times.
Mm-hmm.
So that's why if you do 90 days out, you just get like the 20, 30 delta and you just hold to price target.
Yep, set it and forget.
See,
This is another way you can play your set it and forget it.
and this is one of these things where like it's really effective, but it's really boring, so no one does it besides the people that has so much money.
Yeah, if you have a lot
However,
of money, you can park it here and just make a lot of money.
yeah, I mean, I know people in stock twits that like were buying DraftKings at like $30 and buying options 90 days out, then it hit like 60, right? And now they're like posting like 500% profits. So,
That's crazy.
Yep.
and if you actually if you analyze, do you guys know who Spartan is? Have you guys ever heard of him
Yeah.
or anyone else in here?
I think I've seen him in a few videos on YouTube.
Can you can you pull up his website, TJ, so we can just show them how he does it? I'm gonna share the screen.
Yeah.
We'll look at his swing profits. You'll see.
Okay. Let me see here. Let me share the screen. And this guy. All right, you can see that.
Yes,
Okay. Under swing trade, and then you go at the bottom. You got 24.
performances. Yep.
You go. Let's go April. So if you guys
Can
can
you
see.
zoom in? Yeah, you can zoom in.
Oh,
That's it. That's all it zooms in.
that's it. Yeah.
Oh,
Only.
okay.
What was it? Control plus. There we go.
But you can see right here some of these like 700 ones, right?
Mm-hmm. You got
He
550
tells
right there. 707.
he tells you when he opens it, and then he'll tell you when he closed it,
Yeah, and it
right?
tells you how much of the contract they have left on the right hand side. It says half,
hmm
quarter, three-quarter left. Like that's
But
crazy.
if you see over there, right? The if you look at can you scroll all the way up,
Ooh,
right?
like that.
So he shows you, right? He'll tell you the ticker, and he'll give you the strike price. Like, do you see the WFC, right?
Mm-hmm.
He opened it on November 3rd, but he bought January 2022 30 calls.
Mm-hmm.
See that?
Yep. Can't move it right here.
And it's funny. He turned it from 1.65 to 15.
That's easy. That's crazy. So the
And it's
contract was 165 to $1,565.
mhm.
That's
And
insane.
it's they go like these really long term ones. Like look at Edit, right? It was December 3rd when they bought it, but they bought the May. Remember, like 90 days out.
Mm-hmm.
That's why.
Yeah, that's
So
crazy.
check it out. They bought it at 4.1 and they cashed out at 24.
Yep. Option
Mm,
swings.
yeah.
So once you have enough money to park and wait,
Yeah, exactly.
this is what you can do. But
Yeah.
exponential growth wise, like I mean, you're gonna learn the most when you're in the market, right?
Right.
Since we're still learning, like ideally, and this is why I like scalping, because you learn so much on the behavior of the stock when
Mhm.
you're like glued into your screen in the beginning. And then as
Right.
you get good at reading the patterns, the level two, the tape, like you can then zoom out into the daily or doing like swing trades like what these guys are doing. And you can just park your money and just like go enjoy your time and go, you know, go play.
Yeah, and these positions are huge. Like we're not talking like three contracts and stuff. The last time my friend Phil asked how many contracts he bought, he said he bought 3,000 contracts.
Hmm.
Just imagine 3,000 contracts going like 1,600%. Like literally your whole year is done
Yep,
from just one play.
exactly.
Mhm. So
This is how you guys get rich. This is how
yeah.
we get rich right here. But
Mhm.
for now, I would highly recommend to really zoom in into your play,
Right.
because you're learning the behavior of these stocks. The only way you're gonna learn the behavior is if you zoom in. If you too zoom out, you don't know what happened in the granular um, process.
Exactly.
So,
So like I suggest if you're trying to graduate from like if you're like just really want to swing, just do your 30-day out and like cash it along the way. Like it's very easy to cash them out. And
mhm,
it will like give you the confidence to hold. Like honestly, before I started swing trading, I had no faith on everything. I would cash like the same day and I was like, dang, that was supposed to be a swing trade.
mhm,
But the more you see that it's okay to hold, then you stop caring and that's when the money flows in.
yep,
Especially if a stock is breaking out. Like I know a lot of my friends, like when Square is breaking out, they get out the first day. And it absolutely does not make sense. Because they're so scared of it like dropping, right? Like look at Square. If you got in at the hammer, at the cloud hammer
mhm.
on the very left,
Oh, this one.
one more. That one,
Oh,
right?
this one.
If you got in the
Yeah.
next day, right? They cash it out the same day. The day after, they're like, "Oh, that ran up so high already." I'm like, "Yeah, but
Look at the pattern.
it's
Still
breaking
there.
out, right?"
Yeah.
Like, but and see the thing is, and they're scared to buy the next day because they already scared themselves out of it. They're like, "Oh, it already ran up, so it's not gonna run up. Oh, it already ran up, it's not gonna run up." Dude, no. Like, when stocks are breaking out, they're breaking out. Like, just look on the left some more. Like,
Right here.
yeah, right there, right? Like if you were scared, if you were cashing the same day, you would have been shaken out already, and you just missed like
Yep.
almost like $65 in contracts. So
And then another thing too, guys, too, if you guys want to build your confidence on taking these trades based on our signals, like count how many times it went your way if you would have taken these trades, right? Above the crossovers, above the crossovers, right? Count those. How many could have been gone your way? And I tell you, you're gonna take these trades with full confidence. And here's one that like that failed, right? Like this one didn't really run up, but here's your signal. Your signal was on the downside, right? Look at the SMA is pointing down. And look at the rest of this pointing up, pointing up,
hmm
pointing up, pointing up, pointing up. Like once
and
it's
right,
curling down, like okay, that's a low probability. Okay, like I could show you examples, and this is what I mean by when you're charting. This is what I mean by what to look for. How many times did your signal go your way if you would have taken your trade, right? Above the blue line, above the cloud. Look how many times, guys, like literally almost 100% freaking was that one, two, three, four, five, like all of them went in your way.
hmm
That's multiple days of run.
yes,
So this is why I'm like so obsessed of just like looking at different stocks and just look, literally just go on a daily and just do this. Count how many of them that went your way and how many that didn't. That's how
Mhm.
you can trade your positions with
Yeah.
confidence.
And once you notice that it actually works more than often, like one bad red day is not gonna blow your confidence away. You're gonna be like, damn, it's a red day,
Yeah.
but it's
And,
whatever.
and another thing too that me and Brian talked about the other day is like bet your positions with consistent dollar amount.
Yes.
Because if you do consistently, let's say of all these signals that you took, let's say you 8 out of 10 went your way and two didn't. That two that didn't go your way, it better not be a big loss because you got stubborn and kept adding, right? So if you're gonna dedicate $1,000 each position, keep it like that. And that's why we also said the same thing on the set it and forget it strategy, the sci-fi strategy on the short. And I said to dedicate $1,000 in each stocks because it gives you a more consistent return. It doesn't matter how many of them are losing as long as the ratio is in your favor. So that's one thing to consider, and that's how people blow up because you win 8 times and then you lose twice, and those two was bigger loss than your 8 wins because you sized up too much.
Yeah, like a good example is just say, right? Like let's say you took Square, Apple, and Starbucks today, right? Because that's my positions. If like two of my positions, like let's just say Square and Apple is only $1,000, right? But then my Starbucks is like 3 grand. If my Square and Apple hits like 100% profit, and then my Starbucks gets stopped out at like -30%, I'd still be at the same position I am today.
Yep.
It would be like a break even day
Hmm.
instead of like up a lot of money. So keep that
Exactly.
one in mind.
Yeah, keep in mind on your dollar position, not so much of the contract, but keep in mind your dollar position.
Hmm.
Keep it consistently across the board if you're trading different stocks.
Yeah.
All right, sounds good, everybody.
Yeah.
I'm enjoying these,
Good.
learning a lot from you guys.
Good. That's what we want to
Yeah.
do. We want to pass on all these things that we know because we can't take it with us.
That's true.
Um, okay, so for
Gonna
tomorrow's
take
show,
time, but these constant reminders are helpful for me, honestly.
yes.
It's gonna take a while. It took a long time for me to do those mental reminders, and I still do it. Like I'll still buy stocks that are really far from the 20 SMA because my bias is like it's going up, and then it doesn't move. Then I'm like, dang it,
Yep.
I didn't even pay attention to that. Right.
Yep. You got a habit to really fine tune.
Hmm.
Yeah, same here, guys. I still have the habit of my scalping habit. It kind of interferes with the longer timeline. So if I try to play like Brian, like doing 60 day, 90 days out, like I'd lose my mind because like I'm too impatient. I wanna chart every single support and resistance when it doesn't really matter if the bigger picture is going my way.
Honestly, these options help calm me down because I get into that mode on the stocks, um, and I'm not as ready as I think I am, and then your emotion starts kicking in. But having the options helps alleviate some of that for me personally.
Hmm. Yeah, and that's all it is. It's just screen time, right? Just exposure to really cycle through your emotions, because right now everything is new.
Yeah.
And once you get numb to it and just like I mean I'm pretty much numb to it. Like on my losses and gains now, like it doesn't really phase me anymore.
Like another good one actually, if you're so dedicated in a short term swing, just do your 2 weeks out contracts and do a hard stop 30%. This will help me in the beginning. If you're buying 2 weeks out, your negative percent will be -30, and I literally won't cash it until it hits at least 60 to 80 or even 100,
Hmm.
right? Unless it's a clear like bad news, it's like freaking tanking. But if you keep that in mind, like if you if you're up 20% and then you're wanting to cash it, like you need to stop yourself because you're gonna be like, if I lose 30% the next tomorrow, right? You're gonna your profit and loss like chart will like look the opposite way.
You're
So
slowly like
Yep.
stair stepping down.
you're stair stepping down. Yeah. So once you see like that 30% in a day, just remember it got if it gaps up the next day, it's automatically another 30%.
Yep.
So now you'd be like in profit, right? You're like 60%. You already doubled what you can lose
hmm
in profit.
Yeah.
So
On all my mistakes on the stock trading, that's exactly what I was doing, what I'm not supposed to do. What you guys said, I either got in sizing too much. I'm not putting in a consistent dollar or size, or like I take my profits too quickly, and then when it does go opposite, I don't take my losses quickly, like my profits. So it's I have more green days, but the days that are red like just kills me because of my inconsistent behavior. So
hmm
so
trying to work through that.
if you really try that, just do a hard stop 30%. The moment you see like a negative 30% at one time, you're out. It doesn't matter if it bounces like to like the next candle, it bounces to like negative 20%, you're just out. Once you see it hit negative 30 one time, you have to know that you're out,
Respect your
right?
stops.
Yeah.
Like if you just train yourself that way, like yes, it might reverse, but that could be the one time that it reverses. Most of the time, it's gonna reverse like 7%, right? And you're like, oh, okay, fine, it reversed 7%, but then the drop off is significantly larger.
hmm
Now you're
Yeah.
like, it blows past your negative 30%, and now you're like so deep that you don't even want to cash it because now you're praying to just get out at 30%, and then you
Yeah.
just get stopped. You're like, okay, I can't. It's like negative 60% now. I'm losing all my money.
Yeah, and you go
And
into F it. I'm just gonna wait till it bounces up, or I'm just gonna lose it all.
yeah, and that's how I was when I first started. I'm like, oh, okay, I saw negative 30, but now it's like negative 15. Oh, it will go back to zero. And then like sooner or later, like it's negative 45.
Yeah.
You're like, oh, okay. Maybe it will bounce to like negative 30 and then you take it. But it actually keeps going down some more. And you're like, oh man, I should have just cut right there, right? And
Yeah.
like those were funds that I wasn't planning to lose. So like on a smaller account, like let's say 3,000, you put 1,000 per trade, you were only supposed to lose 300 bucks. But now you're like negative 600, right? You just basically lost twice already. So, and it's a huge loss because now you won't have that buying power to like play 1,000 again. So you might as well just cut it quick.
Yeah, and then going back to charting, guys, like literally do this for yourself right here. Whenever you see it crosses above the the 20 SMA and you're above the clouds, right? Like count how many times that went into your favor. Like I swear, this is what I did, and this is what helped me to take these confident trades. Like this new signal that we just learned from Brian, like this is all new to me. But again, screen time and really understanding what's happening in front of you, which is exactly what I'm showing you here, is gonna shorten that timeline of like really embedding it into your head that hey, this is actually a reliable strategy.
Hmm.
And then do the same thing on the downside, right? Not just on the upside, but count the downside too. If you count and you say, oh my God, it crossed right here, and it was in the cloud. How many of them do you see that stuck to that pattern? So next time you see it, likely your trade is gonna go your way too. So,
Yeah, look, three big ones.
like big moves.
Hmm.
Like you got another crossover right over here.
Yeah,
Right?
every time it does a cloud crossover, it's huge.
Yep.
Get ready for a big move because that means it cleared like a huge support and resistance.
hmm So you can do like 30 days out, a big
Hmm.
target, and then like ride the waves.
And just remember, just because in a daily, it doesn't mean it doesn't work on the hourly, right?
hmm
If anything, if you want to be like a super scalper or like we call it day swingers, just drop to the 15 and do the exact same pattern.
Yep. Yeah, the 15 is the more cleaner on the scalping side.
Right? See, look at this cloud crossover right here.
Yep. Right
The
here.
to the downside. Yeah. Yeah. And can you zoom into the candles? Because it's the same thing, by the way. If you're
Yeah.
trading the 15-minute, a bullish engulfing on the 15-minute is the same as a bullish engulfing on the hourly.
Yep.
So where you see the circle, TJ on the left,
This guy right here.
yeah, right, yeah, right there, right. That's a Morningstar pattern.
Yep.
So it's the same thing. You just buy it above the green line, and then your stop loss is the low of the day.
Yep.
And see, now you're enjoying like a super huge run up,
You got that guy right
and
here too.
there it is again, right?
Yeah, you guys can see him.
TJ, when you're scalping, you chart on the 15-minute, but do you trade on the 5-minute uh, chart, or do you still trade on the 15-minute chart too?
I look at the 5 minute just because I don't know, that's what I'm used to. But it's not
Yeah,
too
that's what I've been do. That's what I've been doing. I just wanted to
yeah, it's not
see
too
if you had a
far
different
from
methodology.
each other as far as like the pattern wise. It just cleans it up in the 15 minutes, you know.
So
Yeah,
what you actually have to do here, I'll share my screen if that's okay.
Yeah.
Let me share real quick.
because sometimes when I trade in the 5-minute, it's the chart is not the same as the 15-minute, but then I back out, and then if the 15-minute chart is still in my following my thinking, then I just let it ride because it still looks good on the 15, even though it might not look as good on the 5-minute chart. So that's kind of how I've been approaching it. But
So like what
So
we're talking about, like if you're gonna take your read, let's say on the 15 minute, right? So in the
yeah,
15 minute, regardless wherever your entry was, right? Let's
right,
say you took this trade right here. Your stop is still gonna be the same price, whether whatever timeline you're at. You could be looking at the 1 hour, the 15, the 5. That's still the same number. That's still, what was it? The price here at 239.64. If it crosses that, it doesn't matter what timeline you're in. It's the same price. Your
yeah,
stop is still the same stop.
see here, I guess I can show you here. Here's an example, right? Um, you guys, are you looking at my screen?
Hmm.
yeah,
All right. So like right here, if you say this is your buy zone, like this guy, right? Let's see, I'll mark it. If you're watching these things right on the 15, and if you
yeah,
just mark this high, because you're gonna say, okay, trigger the morning star. Next candle after the after because this just closed, right? And
yeah,
then this would have been immediately red if you're watching this. So you already know, like, okay, it's red. But in your head is next 5 minute candle that closes above this, right? Is my buy zone and my stop loss is right here, right? You already know. So all you have to do is zoom into your 5 minute, right? So if you look over here, this is what it looks like. If when this closed above here, you're just buying, right? Because these never closed above, so there's no trigger.
Hmm.
Right, but this closed above. Once this closed above, you just buy, and then this is your stop loss. Like no ifs or buts. Like look at this.
yeah,
It's only like this is like not even a dollar, right? This is not even a dollar
yeah,
stop. But now you're just holding these until like until whenever you want, right? You can draw the fib.
When it breaks your pattern or your trailing stop
Hmm.
candles.
There you go. Now you're now that you know your target's 1618. So right
That's
once this
exactly.
hits the next day, you're just gonna get out. But just remember, your entry was off the 5 minute chart, but you charted it on the 15 because you're like,
yeah,
okay, this is my entry because that's a
yeah.
really like that's an
Okay,
engulfing candle. So
yeah,
you just drop it to the 5, and now you know
Yeah.
like where it's going.
And that's what I meant when I said two chairs. Like your price entry is the same no matter
yeah.
what timeline you're at.
Okay. Yeah, that makes sense. I think the reason why I asked that is sometimes I get caught up to where, like, if you look at that chart, like, right when the SMA and the green candles are like right at the cross, like sometimes when you're looking at that and that, let's see, if you go all the way, that's if you go to Friday, yeah, Friday right there, like before it opens, like the red. the red candle, and then it wicks up. No, on the go to Friday, the next one over on your right. Yeah.
This one?
So right there, yeah, right. Like that's where I get tripped up. Is like um, sometimes you look at the red candle and then you know that the SMA is starting to curve up, but then you're watching the next candle to for confirmation, and then it's like, do I watch the 15 or do I watch the 5 to close for confirmation? But the way you guys explained it on the other lines, I guess I should just follow that same approach. It doesn't matter where the candlesticks are. It's still the same approach. You have to predefine your entry first in order to watch that. So
Exactly, because if you say your buy zone's right here and then your stop loss is right here, right?
right, right,
Now you just look on your 5. And now that this closed over here, it actually closed above it. Now you're buying this pullback because you're like, oh, well, it closed above. And now if this doesn't work, I already know where I'm gonna get stopped out. Right?
right,
You
right,
could have just
right.
like once it's closed above, once it's dipping down below, you're like, oh, okay, it's holding. Then you're just buying. And now you're
Yeah,
good.
Well, your stop wouldn't be right below that red green candle though.
Uh this one?
Yeah,
No, it would have been right here because this is the low of the pre-market.
gotcha.
So just yeah, it's like the same as patterns. And honestly, this is like really bad examples. Let's do like a good one, like win, right? Here we go. And remember, we talked about win going short like a very long time ago.
Hmm.
So right here,
Yeah, we
we
charge based on when we
can
miss display.
yeah we it's funny because
We
we
need
were
more money on our option accounts.
yeah we we actually wanted to short right here, and actually it's working. It's kind of funny because we already called this one too, right? So if you just go to your 15-minute, right? A bearish engulfing. So basically, remember, you're looking for this pattern, quick pattern down, and then quick retrace, right?
Yep, the steps.
Like that,
yeah,
right? Steps. So what you're looking for it on this pattern right here is a rejection candle, right?
Yeah,
yeah,
Like a rejection.
you want a big wick on the downside.
Yeah. So right here, it already did it, right?
yeah,
So okay, so you're like, oh, that's a hammer on a rebound.
Yep,
So now you can say, all right, that looks good.
yep, taking that
So
trade.
now you can just be like, all right, my entry's here, my stop loss is here. The moment I see a candle that closes below this line
You go full
is
size.
my entry,
yeah,
right? So that didn't close below. So you're like, okay, no entry. That didn't close below. So that's like no entry. These are just wicks, right? This doesn't matter.
right,
But this
right.
candle closed below. So you're like, oh, okay. So you just buy the next candle because that closed below. And so
Yeah,
now
yeah,
you're you're golden, right?
Yep,
So it's just slamming itself down. And then you do it again, right? You see this rejection candle up here, and then you put your stop up there, right? That candle never closed below, but this did. So you're just buying the same candle.
yeah.
And then you just get slammed again. And so that's why this SMA combo thing is like the best thing in the world because it works. Like it doesn't get any easier than what we're doing right now.
Yeah, those make sense. I think I get hung up on the ones where you're like that candle just wicks up way up, and then you're just like, I guess that's where FOMO kicks in, right? Like the candle hasn't closed yet, but it's like way above my entry, and then it's like, am I gonna miss that, or by the time I enter after that candle closes, is it gonna start like coming back down? And that's why I put my head is at, but I should be looking for a better setup, not trying to guess these
Yeah,
moves,
exactly.
right? So
Look here, right? You have a hammer. So now, if you were watching pre-market, you already know that's the hammer. That's you're saying I'm gonna buy if it closed above this line. You saw a close, you saw a close, right? So
yeah,
if you bought right here, you knew already your stop loss was down here, and then
yeah,
you know you already hit your price target.
yeah.
So
Oh,
that's kind of how you do it.
No, thank you again. This like talking it out loud like this with you guys really helps me a lot.
Mhm. And we try to avoid consolidation. Just remember,
Yeah,
we don't want to trade a box consolidation because this thing will like just kill your premium. Um, basically, this guy right now has no momentum, right? This is flat on the hourly, so you're not trading AMD on the hourly. This has like no clear this has no clear uptrend, right? This is flat.
right,
This is like there's no momentum here. So we like trading
right,
these things that we see. Like the moving average is going upwards. Right now it's flat.
right.
Starting to curl though. You see this?
Hmm.
Right?
Yep,
So now you're just gonna keep watching AMD until we see this curl up. And then from here, you're looking at the hourly, right? Like if you really wanted to, you can say today, if you were watching AMD, you're waiting for the hourly candles to close. You can say, all right, this is like one of the candles. That's a bullish candle. So if you mark right here, right, it's a green, and that's your stop loss. Now you have a defined trade, right? Because you already
yeah,
defined it. Now you're like, okay, I'm gonna give it $1.10 or 90 cents actually. I'm gonna give this a 90-cent move. If it moves 90 cents below, it closes below, I'm out. But if you already marked it in the hourly, then you just drop down to your 5 minute, right? So
yeah,
once this closed above over here, you saw this pullback, you bought it right here,
yeah.
right? This close below doesn't matter. Close below doesn't matter. Doesn't matter. Your stop, you already defined your trade. It's down here. You don't really care what happens. You don't care what happens right here because you're already in. You already defined your loss. Like you can't be like, oh, I'm in, but I'm gonna change my stop to right here because now you're like, yeah, you can't like randomly like, okay, I'm gonna change my stop because that's not working out. No, it doesn't. It doesn't work that way. Once you define your stops on the hourly, and that's your trade, you have to respect it, or it you'll never build like consistency.
Yep.
Yep. So
This is good, guys. I really
yeah,
appreciate it.
That's what we're
yeah,
here for. Now you just
yep,
gotta
yep.
manage your emotion.
Hmm.
Yeah, I I rewrote my rule strategy like 4 times this weekend because I kept changing it, but now I just have to stick to it.
Yeah, like if the number one thing is define your risk. Like just know how much you're gonna lose off the bat. Because if you don't know how much you're gonna lose, you're gonna go in there with all kinds of emotions. You're like, oh man, I could lose like 500 or I could lose 1,000. But if you define this and you're just like, oh, from here to here, even if I put $1,000 down on 30 days out, that's gonna be like probably $75, right?
Right,
So now in your head, like, oh, I'm only gonna lose $75. It doesn't matter to you. Like, if you lose 75, you were prepared to lose 75, right?
right,
But if it hits like what, like $500, you're like, oh, perfect, I won. And again, you don't really care as long as it doesn't break below this line.
Yep.
Or when it breaks below this line, you can't be like, oh, well, the low of the day is right here. like, oh, the low of the day is right here. No, no way. It already broke, right? You can't just like adjust your stop loss because if you do that, I guarantee you're gonna do it like every single trade you're gonna do, and it's not gonna work.
Yeah.
It's not gonna be good.
You're trading with your emotion, not the chart.
Yeah,
yep.
yeah. I mean, it's the hardest thing. It's funny because this is like literally the easiest, hardest job in the world. If everyone says it, it's like it's so easy, but it's so hard at the same time.
I can see why.
Yeah, but
Cool. All right,
yeah.
guys. Well, that's it for now. Again, option plays for tomorrow. I got the Microsoft, MSFT, a Apple, and then AMD is also prime.
AMD.
Yeah,
Mhm.
also prime.
And
It,
just remember, we charted those in the daily, right?
Hmm.
So if you're looking at the daily, you're watching the daily. You're doing the daily stops.
Yep.
If you really want to, If you don't want to do the daily, make sure you do the hourly,
Exactly.
at least the hourly. Because if in Microsoft, I already see the buy entry. It's right here, and your closest, your stop is right here, and your price target's 300
Hmm.
right
Same
there.
ways.
There you go.
Yep.
Like you see this risk to reward.
Yep. Your 3 to 1, 4 to 1 risk
Yeah.
reward ratio is pretty
That's
good.
crazy.
hmm
So
So
that's what you gotta determine. I am still in SQ on the puts. I think it's the pattern's still there. Um, but yeah.
the pattern is here. I mean, this is like a clear downtrend in the hourly.
Yep. Yeah. So when it popped up today, I was like, oh yeah, it hit the SMA, and I was like, oh, this is great because I charted it in an hour. You know,
hmm
I'm scalping, but I charted it in a 1 hour.
Yeah,
So
exactly,
I'm giving it range.
exactly. Like if you say like for
My
me,
stop
right?
was 262.
Yeah, perfect,
So
right there, right?
it's got a ways. Yep.
Like that's a yeah. You gotta wait ways out because if it breaks below here, then
That's the 100
crater some more.
breakdown too.
Yeah, just crater more.
Oh yeah,
There you go. 251.
that's exactly my target. 350.
Mm-hmm. Yeah,
There you go.
perfect.
Trade is confirmed, and I'm holding on tight. And this is only this is only a 10 days out.
Yeah, exactly. Like I'm actually long on this one, but it's because it triggered long for me. But I mean, it doesn't matter. It's like the same thing. Like I'm gonna get stopped up right here. Right now I'm break even. Right.
Yeah, he's still got a long ways to go.
Yeah, I'm break even. Like I'm like this is the stop loss. Like 257.26. Like anything below here is like your stop, because anything below this line is shooting down to 249.
Hmm.
Right. So, however, if we open up right here, then you're shooting for 289.
Yep.
So
Then I'm going long.
yeah, yeah, the teacher's gonna go long.
I know where my stop is, and I can already chart it for the switch and bias.
Yeah, exactly, and that's all there is. I mean, it's either it breaks. That's the beauty of it. It's either it's gonna break long, or it's gonna break short. Like right now, there's no right or wrong really,
Yeah, we're in a
right?
channel.
We're in a channel. Whichever way this one breaks first is the way it's going.
Yep,
So there you go.
exactly. All right, guys, get
All
ready for
right.
tomorrow. Microsoft, Apple, and AMD and SQ.
Yep.
Make some money on Apple and Apple, AMD, and Microsoft. Those are
Yeah,
my three for tomorrow.
and honestly, I think Apple is a good one. I think they have news coming soon. Like, I think there's like an event that they're gonna talk about like Apple Watches and stuff. But I don't know. Someone just wrote that to me. I don't know if it's true or not.
Yeah, we'll look it up. We like that
Yeah, we'll
chart.
look
Let's
it
go
up.
to one. Let's go to 155 tomorrow.
Yeah, if it like okay, like you're seeing this as +4 right now. If this ends up turning super green tomorrow, it's going to 155, and you're gonna be like 100% on your 30 days out.
Hell yeah,
So
got my eyes on it.
cool.
I'm ready.
Yep. Yep.
That's cool.
All
See you
right.
All
guys.
right, guys. Have a good night. Catch you guys in the
Yeah.
morning.
All right,
See you
see you
tomorrow.
tomorrow.